If you are a beginner forex trader, without the market structure, there is no way you'll be able to trade the forex market. So this is a video dedicated to those that are still struggling on how to identify their market structure. So I'll be taking our time today and I'll be educating you on how to mark out your 3 market structures. Make sure you watch till the end and also like and subscribe. Before we do anything, let us first of all understand the structure. So in definition, market structure in Forex is the underlying framework of price action in the market. So let me just explain this in the simplest way possible. So what this simply means is you drawing out lines, okay, to identify price actions in the market. So price actions simply means the money that comes into the Forex market. So what I want you to understand is the orders that are coming into the Forex market are either the buy orders to the up or sell orders to the down. So these are the 2 orders that comes into the market, buy or sell. Okay, so your underlying framework of price action, that simply means you are drawing lines, your underlying framework of the buy and sell orders coming into the market. All right, as simple as that. Don't bother yourself too much about it. Okay, then the types of structures we have in the Forex market. So like what I said just now, the orders coming into the market, it's just 2 orders. That's the buyers and the sellers. So the types of structure we have in the market is 3. All right. So I will start by explaining the first one. So the first structure we have there is range structure. We'll look into it anytime soon. And the second structure we have there is uptrend structure. The third structure we have there is downtrend structure. So the range structure involves the buyers and the sellers. The uptrend structures involves only the buyers, while the downtrend structure involves the sellers. You'll get to know why anytime soon. So let's start with the first one there, range structure. So the range structure is a type of market structure that deals with the buyers and sellers getting involved. So what does that mean? This is a situation whereby the buyers and sellers, they are in same level. Okay, they are in same level. So what are they doing? They are creating multiple, okay? They are creating multiple equal highs. They are creating multiple what? Equal highs and what? Equal lows. So it's good you understand this, because this is everything that Forex has to deal with this year. Structure is everything that Forex has to do with. So you can see what I'm labeling out for you now. The market deals with what? Equal highs and equal lows. Why does this come to play in the market? Well, this comes to play in the market because the buyers and the sellers are in a range. So they're in a fist fight. The buyers are buying, the sellers are selling, the buyers are buying, the sellers are selling. So nobody is buying above the other. The price is in a balance. All right, that's the range structure. So there's literally not much to this, and it is strictly advisable for beginner traders, if you are new to the market, to stay away from markets like this. Okay, it's very, very advisable you stay away from market like this, because the market is not giving you any decision to take action on. It's not giving you a decision to buy. It's not giving you a decision to sell. What it's just doing is giving you equal highs, just like what you see here. So all these levels where the price, like I see price just sold from there down, sold from there down. All these levels are just levels that price react to, and not with the space of time. Price buying up from those levels. Okay, so those are equal lows and equal highs. It's not advisable. It is not advisable to trade this kind of markets. That's why it's called the range. Okay, it's indecisive. Then the second type of structure we have there is the uptrend structure. Okay, the second type of structure we have is the uptrend structure. So like I said, in the Forex market, we do only two things in the Forex market. The first thing we do is we buy. The second thing we do is we sell. So these are the two things we do. Apart from buying and selling, we stay away from the market, which is the range. So what is the buy structure made of? First thing I want you to understand is the uptrend structure is a representation that the buyers are currently in control of the price. So what happens is the uptrend structure is a period of price retracing up, okay, then making a correction down. So what happens is price will buy up like this. Okay. Price will buy up like this. Then it's going to make a correction down. Then goes up again and makes a correction down. Why is this happening? This happens because the buyers and the sellers, they are involved in this action. But what you can see that even with the sellers coming in, the buyers are still winning, whereby they are creating series of new highs. All right. So in the chart, you will be simplifying your structure to, please follow me, simplifying your structure to higher highs and higher lows. Those are the rhythms, okay? Those are the rhythms. So your structure is based off high highs and higher lows. I will explain that in jiffy. I will explain that in a jiffy. Okay. Higher lows. So the reason why the uptrend structure is made up of higher highs and higher lows, I will explain this in a very, very, very easy way that you will understand in the space of 3 minutes. So let's go. Now, this is a high point, okay? This is what? This is a high point. And this is price buying to a certain level, okay? Then the seller steps in to correct the price down a little, and this low is being generated from this high. That makes it a higher low, all right? Then the buyers now steps into the market and push the price above the previous high, creating a new high. So the new high created is tagged a higher high because it is a high that is higher than the previous high. So there are more things to look into. We have the breakup structure, but I'm going to be discussing that in another video so that you guys can pick out vital information from this particular video. That's why I don't want to cloud it with a lot of things. So just want you guys to pick this from it. This high is created from the previous high being sponsored from the higher low. Okay, so an uptrend structure is series of higher highs and higher low, price buying and selling at the same time, but the buyers are taking charge. So let's move to the third type of structure we have. So the third type of structure we have is an opposite of the second structure, all right? So the third structure is downtrend structure. Just like your uptrend structure creating higher highs and higher lows, price retracing up with first, then making a correction down, making an extension up, making a correction down, just like that. That is also how your downtrend structure work. But instead of the buyers taking charge, like winning, the sellers are winning. That's the difference. So just like your uptrend structure creating series of higher highs and higher lows, the downtrend structure creates series of lower lows and lower highs. And same system is being applied. Okay. And you will understand in the next 3 minutes because I'll be looking into it now. Now, just like the way I explained the uptrend structure, I'll be taking out time to explain the downtrend structure as well. Now, follow. This is a low. Okay. This is a low. And this low was created due to the seller stepping into the market to sell the market. Mind you, in Forex, you don't just buy, they don't just buy, the price won't just buy or the price won't just sell. No, there's this fight between the buyers and sellers, the price buying up, selling down, selling down. So it is the party that is currently in charge, which has enough volume in the market. That's the direction the market is going to go to. So after the low, price creates a high. This high is tagged as a higher low because this high was generated from the low. Okay. And the lower high creates a new low that is lower than the previous low. That is where the lower low comes in because this low is lower than the previous low. All right. So as much as lower low keeps coming to play in the market, the structure is going to be a downtrend structure. All right. As long as lower lows will keep coming to play in the market, the structure is going to be a downtrend structure. So let us put everything together and see what I'm trying to say. So a structural loop is the nature of the market. So what is the nature of the market? So this is an introduction to structure as a beginner forex trader. So one thing I want you to understand is that the market does two things: buys and sells. Okay, buys and what and sells. That's what you should be focused on. All right. Now, if you check very well, you discover that we were in an uptrend structure, which is this green box that boxed up now. Then we fell in a state of consolidation, which is a range, in a state of range in the market, is this range here. Then after that, we had a downtrend structure. So this is what happens in the market every single day. Now we are going to see some live examples and see how candlestick do replicate this stuff here. Okay. Here is a live example of chart replicating structure. So if you're confused, I want you to understand that these are multiple candles creating live data on the orders coming into the market. Okay, so these are the visual representation of price coming into the market. So the structure, just like the way I drawn it earlier, it won't look as neat as that. So that's one thing I will show you. It's going to be confusing, clingy, and somehow rough, but the objective remains the same. Like I'll be starting from the downtrend structure. Like what I mean is price created a low. All right. Let me make this tick. Okay. Let me make this tick and colorful so you can see it very well. Okay, good. This is good. So the objective remains the same. Price creates a low, just like what I told you earlier on. Price creates a lower high, creates a lower low, creates a lower high, okay, creates a lower low. Now, you can see I am literally omitting some basic structures here, like the structures. You can say I'm omitting them. You can say I'm omitting them. Well, I would have loved to discuss on them now, but this video is already getting too lengthy. So I will drop a link in the description for you guys to go and check out another video where I explained why we omit this fracture structures and also the step-by-step procedure on how to mark out a structure in the market. Okay, so this is just introduction to forex, to structure the forex market. I don't want to take much of your time, so make sure you watch the second video. I'll drop the link in the description and I'll also leave the video tag name. Okay, this is your lower low, lower high, lower low. So you can see it doesn't look that smooth or accurate like what I showed you earlier on, but the objective are the same. You have the lower low, the correction, price pulling down, retracement correction, you have everything intact. Okay, so if you go further, I believe you will see okay, this is the range and market. This is the range and market is the first structure I taught you. I just showed you what you can see. You can see price creates a low here. In that same area, price creates another low here. In that same area, price creates another low here. So these are what? These are equal lows. Equal lows, all right? You can see price creates a high here in that same level. Price creates another high here. In that same level, creates another high here and another one here. So these are what? These are equal highs. So that is making here a range in market. Range in market, as I explained, is price creating series of equal highs and equal lows. Okay, so you can see you can't get a clear structure from here. If you say you should even try to get a clear structure from here, you will easily be stopped out. Price will go back up, come down, go back up first. And this is a no-go. Okay, we don't trade this, we stay away from it. Okay, so I won't advise you trade it. All right, so let's check for the uptrend. Okay, we have an uptrend structure here. This is an uptrend structure. Okay, if you're having challenges finding them, I'll be dropping a link in the description where you see watch a video on how to mark them out in a physical trade. Okay, was live market movement. Okay, so the objective are the same. You have the high, you have the low, you have the higher high, you have the higher low, you have the higher high, and so the objective they are the same. Okay, the objective are the same. So do well to like and subscribe to my YouTube channel, and also check out this video where I use the live market to mark out the structures. Thank you.